Welcome to Africa Ascending, a podcast series looking at key issues affecting the African business environment, and more particularly its impact on the insurance sector in Africa. Hosted by Afro-Asian Insurance Services and Africa Ahead, in this series we'll be looking at everything from water regulations, currency devaluation, and climate change. To access this podcast in other ways, we will be appearing on Africa Ahead at www.afapublishing.com, Spotify, and also on the media page of afroasian-insurance.com. My name is Liz Booth, and I'm the editorial director at Africa Ahead. With me, I have
Uday Patel, Chairman and CEO of Afro-Asian Insurance Services Limited.
Thank you, Uday. Today we're talking about the impact of war and conflict on African economies, sadly something that is all too relevant right now. To do this, we have Fabio, Andreas, Diaz, who describes himself as a global systems thinker. He is a senior researcher at the African Centre of Excellence for Inequality Research at the University of Cape Town, where he coordinates the university's Sustainable Development Goals Fellowship Programme. He is also an honorary research associate at the Department of Political and International Studies at Rhodes University in South Africa. And with him, we have Kanika Thukral, Associate Director of A.M.Best London office and responsible for ratings coverage in the London market, Africa and the Middle East. Welcome to both of you. Fabio, perhaps I can turn to you first and ask if you can set the scene for us in terms of the current conflicts in Africa. What's happening in Sudan or Mali, for example? What's the impact of Wagner? What's happening recently in Ethiopia, Egypt and Somalia?
Well, we seem to get back into the story that we lived during the Cold War in the continent. We have several conflicts ongoing, a lot of tensions taking place from the south, Mozambique, to the northern Ethiopia, and this relates with several of the aftershocks that affected the continent during the pandemic and after the pandemic that have brought a lot of societal and political demands that are meeting tighter budgets by countries and social upheavals that explain what we observed a couple of weeks ago or months ago in Kenya. In addition to that, we have ongoing informal conflicts where you have smaller insurgencies associated with Islamic organizations in some cases, and more conflicts that take place in contexts in which the states are being challenged in their own existence, as in the case of Ethiopia after the conflict that started in Tigray, has involved several other actors. Or we have the case of Somalia, a country that is still not consolidated as itself and having these tensions between Somalia and Somaliland. And for example, Ethiopia trying to have access to warm waters once again, and the relation of this between the conflicts going in Libya and the case of the tensions associated with the dams in Ethiopia and Egypt. So there's a series of conflicts taking place in Francophone Africa, North Africa, and Southern Africa that set the tone in a really, unfortunately, grim way.
Thank you. Perhaps, Kanika, we could take one step back and actually define what is war and conflict. What do you mean by systemic events?
Sure, Liz. So I think I would try to focus on the definitions more from insurance perspective. And for our discussion today, I want to use Lloyd's definition of war. So Lloyd's defines war as an armed conflict between states that involve physical force, a civil war or rebellion. Lloyd's also defines a cyber operation and, say, a use of a computer system by a state to disrupt, destroy, or manipulate information in another state's computer system. I also want to highlight some challenges in defining war for insurance purposes. There's no universally accepted definition of war, and different jurisdictions have different legal views. So when considering war in an insurance context, a formal declaration of war may not be required. And coming on to your second question on systemic events. So within the financial services industry, the Financial Stability Board has a good definition of systemic events. So FSB defines systemic events as the risk of disruption to the flow of financial services that is caused firstly by an impairment of all or parts of a financial system, and secondly has the potential to have serious negative consequences for the real economy. So these could be failure of prominent financial institutions that may be considered too big to fail, So in the insurance world, we have companies like AIG, Aviva, AXA, which are considered too large to fail. So on the domestic front, some regulators have come up with domestic systematically important insurers, or what called DSIIs, in the local countries. So, for example, in South Africa, you have Discovery, which is considered one of those organizations which are too big to fail.
Can I just ask you, Kanika, since you are defining war, conflict, and defining systemic events, if we take one aspect of conflict, which is terrorism, if you will agree with me that in Africa, the terminology definition has been quite varied. There was, I believe, at one point in the past, the CIMA zone, which is the Francophone West African market, trying to put its own definition of terrorism in there, which was possibly vague, in my opinion, and thankfully hasn't been tested in courts. But it was totally different from what London market was trying to define as terrorism. So is that a problem?
It is there because we have to understand how the dynamics of the insurance industry within Africa works, right? So the local capacity is limited. The local capital of regional or African insurers is limited. In the end, there is reliance on the international reinsurance markets. And risks like terrorism and war, these require huge capacities. So the expectation is that local insurers will pass on these risks to the international retrocession market. So there needs to be an alignment of terms, because the international retrocession market will definitely use the more acceptable concepts and more acceptable definitions and contract terminology for terrorism. So I think in local insurance bodies and local insurers have to be careful when they're using their own definitions, because they could definitely insure a risk based on their definition. But when they are reinsuring it internationally, it is likely that the international definitions will apply.
I think, like, following what Kanika says, I think it's also important to highlight the dynamic nature of conflict, So whereas you might have a definition that tries to make you account for the way in which an armed action can take place as terrorism, the incentives for armed actors are always to innovate, because that's their job description. So that makes it extremely hard to account for all the possible scenarios that you have to face, or what constitutes terrorism or not. In that sense, because in the case of insurgencies, let's say in the case of Mozambique, it is extremely difficult to understand whether that's terrorism or not, but they will make use of terrorist tactics in different ways, right? So where it's like burning a car, bombing a car, affecting civilians, affecting infrastructure, affecting the infrastructure that leads to an investment outpost, let's say a pipeline or like a manufacturing plant. So that makes it extremely hard to put the finger on the pulse of what would be, because we are not in the heads of terrorists, luckily. And that makes it extremely difficult to imagine how will they deploy their creativity in waging violence.
Thank you. So obviously, we insure war as such, or terrorism, whichever is decided. But actually, the impact of war is much broader than the narrow conflict itself. So, Fabio, how else is it affecting African development?
Well, I think, like, we don't make this distinction commonly, but war is the antonym of development, right? You have like health outcomes clearly being affected, people dying, people being harmed, collateral damage, civilians being affected by the waging parties, whether they're state parties or terrorists or Islamic insurgencies. And you have the challenges to try to deploy development initiatives. If you want to, like, let's say, increase the provision of water and sanitation to an area, if there's an armed group, the likelihood that a government will be able to deploy those development initiatives, by definition, will become harder, because the context is one that is harder to operate. If you want to develop infrastructure and factories, it it will become harder to do it because the incentives for armed groups is to attack those things that attract capital because they get attention from the governments and they get political leverage. So in a way, war itself is always going to do these kind of things. And we can see it, for example, what happened in Ethiopia. Ethiopia was doing well. Their economy was doing well. They were taking people out of poverty before 2020. The numbers were really promising. But that conflict unfolded out of the blue to a great extent. And it has taken the country like several decades back in the past. So I think that's the challenge of different kinds of conflict, especially in countries that are least developed, more indebted, with lower state capacities. It makes it extremely hard to try to break the barriers of poverty or inequality in that sense.
So, Kanika, can insurers help with that?
Of course, the insurance have a role to play, right? I think with any war or any conflict, there comes this destruction in terms of property, in terms of loss of life. So insurers do play a crucial role in supporting the rebuild after a war. But what is really important is that insurers can only take a secondary part in rebuilding, right? The primary function has to come from, say, governments or regulatory insurance bodies in order to mobilize the insurance industry to be able to provide efficient protection. And I think there is, of course, in terms of a commercial relationship, right, for insurers, it is a risk that needs to be insured and a premium to be charged for it, right? So I think the complexity with war risks is it's very difficult to model that risk. It's very difficult to define what is the right level of premium that should be charged should a conflict happen in a country. So I think insurers do have a role to play, but their role is limited in terms of the capacity that they can provide. A larger role needs to be played by governments and insurance bodies in the region to mobilize insurance market effectively.
Can I come in there, Kanika, and just add, we ourselves have actually experienced the impact of war on certain risks which have opted to purchase the war extension on terrorism cover. Specifically, I refer to Sudan. We were heavily invested in Sudan, and overnight, and of course, they all bought political violence, terrorism cover with the war extension. And then overnight, our income dried up, and suddenly we were just processing claims. And what we found was that the PVT and war underwriters were not prepared for it, because where they were charging X before the war, when certain risks came up and clients started inquiring, look, how much to now insure my property in Khartoum or in Omdurman, the rate suddenly went up, not 100%, but we're talking about 1,000%. So there doesn't seem to be any sort of science behind underwriting and attaching rates. It's basically what the market will withstand. I mean, is this something, Kanika, that you're finding more and more, and should there be some sort of a mechanism of pricing?
I think it's a very complex question to answer, right? And like I said, there isn't a perfect model that can tell you what the impact of war is going to be. Of course, when insurers are thinking about their exposures, they obviously want to see the contracts will define their exposure, right? So there's loss to, say, property. If you have a property cover, there's loss to property. But then a war could be extending over multiple days. How many events would you count it? How many reinstatements would you count it? Those are very difficult to define, right? If a war extends over a period of 2 months, then how many events is it? Is it a single event? Is it multiple events? And there are multiple instances of destruction. So I think there are complexities which are difficult to foresee and define in a contract. and requires quite sophisticated insurance modeling. And that's why there is lack of capacity in the local market, because this is a very sophisticated science, and I'm afraid that that level of expertise does not exist in the local market, and that's why there is a heavy reliance on the international market. And of course, with like more and more instances of war, the picture will get clearer. But again, these can be claims which can be very long to settle, could end up in litigations because of these clauses, which are just so hard to define. And how many events, how many reinstatements would you consider?
Thank you. We only have a couple of minutes left, so I wonder if we could just turn our attention to sanctions, which I know is a huge topic. But Kanika, again, a lot of insurers have had to actually increase staffing just to manage the sanctions risk. And I'm just wondering if that's something that you're seeing particularly in reference to Africa, or is it just because they're doing other risks which might involve Russian oil or something like that? How do insurers cope with the sanctions risk at the moment?
I think the sanctions, the most heavy burden of sanctions came in place after the Russia-Ukraine conflict. And the sanctions placed on Russia by UK, EU, and US is a good example, which bans imports of Russian oil and oil products. In addition, these sanctions also limit insurers to provide insurance coverage for Russian cargo. This does create an additional burden for marine insurers, as you rightly pointed out. There are numerous sanction programs in place. They're constantly evolving. And to stay compliant, it's crucial to stay up to date on the latest changes. I think at the time when the sanctions were introduced, there were significant legal clarifications which were required on how sanctions were to come in effect or how to comply with them. I don't think that there was a dramatic increase in staffing observed, but definitely an additional cost in terms of advisory and consultancy, which was involved. Since then, things have settled. People are generally insurance market is coming to grips with sanctions, but then, of course, there is greater due diligence required. And technology does support with those additional requirements, right? So there is staffing required, but probably not materially large numbers required. But it is something that insurers are constantly monitoring and spending a lot of time on due diligence.
Fabio, just a last point to you. Are you seeing sanctions becoming an issue too?
I think they're part of the picture, right? And they try part of the scheme of incentives that try to deter actors to getting involved in the continent. But the thing is, Africa is the fastest growing population in the world. It's a source of natural resources, and you will have different actors beyond Russia, the US, and Europe. China is getting in, so we could imagine the future perhaps sanctions between China to European countries or from European countries to China. Right? Because this is going to become another stage of what we observed in the continent between 1948 and 1990s. That there was a lot of political tensions and different countries are trying to get the best out of it. But now we have global and local hegemons. So you have Turkey, the Arab states trying to also play politics and influence their different constituencies here. You have European countries, France trying to regain some sort of traction in Francophone Africa, plus the UK and the US and China. So it's becoming more complicated, and the risk of this is that this might make it easier for armed groups to emerge because it's easier to get guns because there's a bigger market, basically. And if there's no development, the market you're helping to build that market. So I think that one of the tricky positions there, and following up on Kanika, perhaps a way in which sanctions could actually help to build development. That's a way of insurance coverage, right? If we could figure out something like that. But I don't think something like that has come yet into the fore.
Thank you very much. We've run out of time, and again, we're on a conversation that could run and run and run. So thank you very much for the conversation we've had today. I suspect it's one that we will be picking up again in the future. But Uday, may I hand over to you just to say goodbye and sign us off?
Thank you very much, Liz. And thank you, Fabio and Kanika, for your valuable contribution today. Just to briefly summarize what we discussed, we all acknowledge that the African continent has a lot of simultaneous conflicts going on for various reasons. And I think we can write a book about the causes, least of which is probably tribal, which has been going on for centuries. However, it was very interesting to discuss exactly what the reaction of the insurance industry in terms of mitigation was to war and conflict. We also pointed out a few anomalies there, especially in terms of definitions, wordings, etc. And of course, we discussed sanctions, the application, the cost of sanctions, and I think also maybe the possible solutions, which are something that can be looked at in the future. Also, the involvement of AI, where checks and sanctions are concerned, and because I believe nowadays technology allows you access to third-party information as well, and databases. So thank you very much, everyone, for your contribution today. And to our audience, thank you for attending. And remember, folks, at Africa Ascending, we ask the difficult questions in the hope of finding long-term solutions. Hope that you can join us next time. Thank you. Goodbye.